What is going on, everyone, and welcome back to Explain the Charts. Today, November 18th, 2025, we are diving deep into Alphabet, ticker symbol Google, which just had one of its most explosive news days of the year. The legendary investor Warren Buffett and his firm, Berkshire Hathaway, have just disclosed a massive $4.9 billion stake in the company. This news sent the stock gapping up to a brand new all-time high yesterday. We're going to break down all the news, look at the charts in detail, and discuss what could be next for Google's stock. First, let's cover the catalysts, because context is everything here. The headline story is Buffett's Berkshire Hathaway buying over 17 million shares. This is incredibly significant because Buffett has historically been cautious about tech stocks, making this a major endorsement of Alphabet's future, especially its position in the AI race. The market reacted exactly as you'd expect, with shares jumping nearly 5% in pre-market yesterday and rallying hard at the open. However, it's important to remember that just last week, the stock was actually falling. News of a formal investigation by the European Commission into Google's search policies created fear and uncertainty, pushing the price down. This created a fascinating pivot from bearish news to overwhelmingly bullish news in just a couple of trading sessions. Now let's look at the daily chart to see the big picture. As you can see, Google has been in a powerful uptrend for most of 2025. The stock bottomed out way back on April 7th at a low of $140.53. Since then, it has been a fantastic run, more than doubling in price. This broader trend has been fueled by the overall market strength and the hype surrounding AI, where Alphabet is considered a key player. The price has been making a series of higher highs and higher lows, which is the classic definition of a healthy uptrend. Let's zoom in on the last couple of months to see the more recent story. Through October and early November, the stock was consolidating its gains, trading in a range mostly between $275 and the low $290s. Then, right here on November 13th and 14th, you can see these two red candles. This dip corresponds directly to the news about the EC investigation, taking the price from over $286 down to a low of about $270. This was a textbook example of news-driven fear causing a technical breakdown from the consolidation range. And then came yesterday, November 17th. This is the massive candle caused by the Buffett news. We see a huge gap up, opening at $285.77, well above the previous day's close of $276.41. The price then rocketed to a new all-time high of $293.95. Look at the volume bar at the bottom. It's one of the largest we've seen all year, signifying massive institutional interest. However, it's critical to note that the stock did not close at its high. It pulled back to close at $285.02, leaving a long upper wick on the candle. This suggests that while buyers were ecstatic, there was also significant profit-taking at these new highs. Switching to the 1-hour chart gives us a better view of yesterday's intraday battle. You can see the explosive move up in the first couple of hours of trading, peaking right here at $293.95. But after that peak, the rest of the day was spent pulling back and consolidating. The price found some stability in the $285 to $288 range. This confirms what the daily candles wick suggested. The initial frenzy gave way to a more balanced market as sellers took profits off the table. Now, looking very quickly at the 15-minute chart, we can see the action with even more clarity. Here is the powerful surge to the all-time high, followed by a sharp sell-off. For the majority of the afternoon, the price chopped around, with buyers defending the $284 level and sellers defending the $286 level. The day ended without a clear winner in this short-term fight, settling right around the $285 mark. So, back on the daily chart, what's the verdict? Let's lay out the bull and bear cases. The bullish case is strong and straightforward. The stock is in a confirmed long-term uptrend, backed by a massive vote of confidence from Warren Buffett. It has broken its previous all-time high. Bulls will want to see the price hold above the gap, specifically above the $276 level. A move back above yesterday's high of $293.95 would signal a continuation toward the psychological $300 level and beyond. On the other hand, the bearish case focuses on the short term. The stock is extended after a massive run. The long upper wick from yesterday is a sign of selling pressure and could mark a temporary top. Bears will be watching to see if the price drops and fills the gap left from yesterday's open. A close below $276 would be a significant sign of weakness and could lead to a deeper correction, potentially back towards the $270 support level. To recap, let's nail down the most important price levels and potential scenarios. Your key resistance to watch is the new all-time high at $293.95. Your first major support area is the closing price and intraday base around $285. Below that, the most critical support is the top of the gap, around $276. Now for some unbiased predictions. The highest probability scenario, I'd say around 70% likely, is a period of short-term consolidation. The market needs to digest this massive move, so expect the price to trade sideways, likely between $280 and the $294 high for a few days. A less likely, maybe 25% probability, is an immediate continuation of the bullish momentum. This would require sustained high volume to push through the profit takers at the new high. Finally, a low probability scenario, around 5%, is a complete and rapid reversal that fills the gap. This would likely need some new negative catalyst to erase the powerful Buffett sentiment. Keep an eye on trading volume. Decreasing volume would support the consolidation theory, while a spike in volume would suggest the next big move is imminent. That is our in-depth look at Google. The Buffett news has fundamentally changed the narrative around the stock, but the charts are showing a classic battle after a huge move. Thank you for watching Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let us know your thoughts in the comments. Please remember, this video is for informational and educational purposes only and does not constitute financial advice. You should always conduct your own research and consult with a professional before making any investment decisions. Trade safe, and we'll see you in the next one.